In this video, I'm going to give you a trade idea inside of Starbucks, one in which I think you can get ahead of the actual trade. The reason I say that, I think the actual setup is valid for the month of November, and as I make this video, it's currently October 9th. So you have almost 3 weeks to try and build a better position inside of this trade in Starbucks. Let me start the story off first with some seasonal analysis. If you haven't already seen our previous research video on Starbucks, take a look at it. The overall idea that I was investigating was, do the holiday drinks that Starbucks have, do they drive any kind of meaningful impact into the stock price? We took a look at seasonal data, we looked at 20 years worth of data, there were lots of patterns. I'll leave a link to that video if you want to understand a little bit more of the nuances of that research. The main takeaway that we found from that was there was some level of impact that the holiday drinks drive. You could predict in some aspect when you think Starbucks was likely to go up, and the month of November was a month that kept standing out over and over. Well, as I make this video, we're in October 9th. We have about 3 weeks left before November kicks in, and there's plenty of opportunities and confluences which I think make for a nice reason why you may want to be long naturally as you head into the month of November. Now let's start first with the seasonal analysis. I've loaded in our free seasonal analysis indicator, and we're going back more than 20 years worth of data. Take a look at the labels which are green. You'll notice Feb, March, April, July, October, and then November. Out of these months, March and November stand out because of this first number being the highest at 75%. That tells us 75% of the time, this month tends to close above where we opened at the beginning of the month, meaning it's an up month. The second number tells you on average what move that was for Starbucks for that month. So for example, 75% of the time, Starbucks tends to have a positive March. On average, that move from the open to the close for March is about a 2.43% positive on the upside. We repeat that for November. Take a look at November for that percentage, 3.86%, very clearly leading the way. If I shrink this from 20 years down to just 5 years worth of data, you'll see November stands out even more at 8.68%, 5 out of 5, the only one that stands out now. We lose the earlier month popularity that we had before with the confluences. So that's where I think November is a good month, and so far we have 3 weeks to build a trade. Another thing that stands out to me is the Fibonacci confluence. I took our swing high to swing low, and then this swing high to this swing low, and I projected that from our current swing high. That gives us two levels, 73.53 and 59.53, about a $20 gap here. I think that's a fairly wide gap, so 73.53 looks like a much nicer level closer to where price is, and also lines up with some of these wicks that we have, previous support. So 73.53, I think a very interesting level. Another thing that stands out is this trend line. This trend line is from 2012, and take a look at how many times we've tagged and respected it. Once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, and if we did this one more time, that would be now the 8th time that we would be touching the trend line. Overshooting it by a little bit would take us to 73.53. So I think that's a really nice level. Now we have our daily bias. We know why we like Starbucks. Take a look at the research to understand the holiday drink bias. Now we need to find our actual intraday triggers. For that, I think you can use both the daily and the hourly volatility box models. The daily models will be nicer for more of the swing trading, looking to build up an entry as we get closer to that 73.53 zone, and even this trend line for that matter. If we come into our smaller, closer day action, you can see how we tagged or fell right into our aggressive volatility box models, and then our conservative models bouncing up each time a little bit. And since then, we've just been grinding down lower. We've seen the velocity of this sell side activity has really just slowed down quite a bit. So we might even see a little bit of a reversal here, maybe gearing up for one more short side entry. With the hourly models, you can trade both ways, long and short, and take advantage of scalp side volatility. Here's an example of a short setup. Here's an example of a long setup. Today we had back and forth chop. If I come into Tuesday's activity before Wednesday, you can see the long side entry we had 2 different times when price fell inside of our models. So there's lots of volatility inside of Starbucks as we kick in closer to this holiday time frame period. Again, our bias is more to the long side, but we have levels as we head lower, so both the longs and shorts as we get closer to these levels make sense. Near 73.53 though, I'm definitely much more biased towards the long side, especially with the holiday drink bias that we have. Hope you found this video helpful for getting ahead of a trade this time. This is giving you almost 3 weeks worth of notice to build up a position inside of SBUX. Take care, good luck trading, and I'll see you in our next update.